Well, if you trade the stock market, you're probably getting tired of watching it go down week after week. However, there is hope, and I'll show you exactly what that is. Plus, I'll do my regular analysis of the markets, and then we're going to look at the swing trade of the week on MTC. Well, stocks have fallen pretty significantly over the last 3 weeks. They're now at the point where they are oversold. I'm going to show you in a chart in just a moment why that is. They're also coming into a floor price where they are likely to bounce. Now, when you have prices falling into support, falling into a floor price, you typically get a reversal. That does not mean that it's an end of the downward trend. It's simply likely that next week we'll see the market reverse. We're also going to take a look at the bond market because that has been selling off very sharply as well, and it too is oversold. So I'm going to explain some important concepts in chart reading that'll let this all sort of make sense, why I say it's oversold and why it's likely to bounce. So let's do that. Here is a chart of the S&P 500. And the first thing you'll notice is that I've drawn some lines on here. We've got this downward trend line, and then we've got the longer term downward trend line. And anytime the distance from where the price is now to where these trend lines are is quite far, that means you're oversold. All right, so the farther away you get, the more likely it is that you're going to bounce because you have this oversold nature. All right, so that's number one. We have that. The second thing is we have this floor price from the lows back in early October. So we are falling into a floor that is held up a number of times, and we're oversold, and that's why I think next week we'll see a little bit of a bounce. Now here comes the caveat. Although it's likely that the market will bounce in the short term, it may simply do this and then continue and ultimately break lower. So I don't think this market is out of the woods by any means. In order for this weakness to end, and we've had weakness since the start of October, for that to end, we need to build a rising bottom and then start to break these downward trend lines. So the way you should look at the market is next week, good chance we're going to have a little bounce back, but then we need to watch and see if the market can break the downward trend line, break from being oversold. Now, despite this weakness, there are opportunities to buy every day. We are doing lots of trading on the buy side in Active Live, my service at Stockscores, where I basically have algorithms picking out stocks that are likely to move well. You can learn more about that at my website, stockscores.com. Those markets, even though they're going down, it doesn't stop these lower price stocks with extremely high liquidity that are able to attract a crowd to make gains of 100%, 200% in just a few days. So I've got one of those at the end of the video. I'll show you that, and I'll show you exactly where it was bought and where it should have been sold after a big gain. All right, let's get into this week's market analysis. We're going to jump over to my website, stockscores.com, take a look at S&P ETF, SPY, which we just looked at, and you can see the daily chart winding lower with falling tops, and that of course means the sellers are in control. And again, that 3-month weekly chart is right at support. So not only do we have this horizontal support, but we've also got this upward trend line of support, and that's why it's likely that we're going to see the bounce back up to this downward trend line. But until we can build a rising bottom and break the downward trend line from a rising bottom, I want you to remain pretty cautious. Let's take a look at the NASDAQ, QQQ. There you can see it has fallen into support. We've hit this support zone a few times, and that's why it's likely to bounce back. Again, it is also oversold because price is far below the trend line. How about the small cap stocks? Well, a much sharper downward trend in the small caps. You can see that there. If we go to the 3-year weekly, you see that it too is coming into this area of long-term support where it should bounce. We'll see if it happens. Next one, T.XIU, which is the TSX market. I mistyped it. Let me try that again. You can see we've been moving lower in the same sort of way, but this chart in the long term is actually not as bad because it's really been stuck in this sideways range. So strong commodity prices are propping up the Canadian stock market. Let's take a look at some of those commodities. Start with USO, which is oil. And we had some weakness, and then the problems started in the Middle East and Israel and Gaza. And of course, that's pushed oil higher. It is coming into some highs where you would expect it to get stuck, and we'll see what direction it takes after that. But the momentum is still up, and so relatively bullish on oil still, although the volatility creates a lot of uncertainty. Speaking of volatility, here is gold. It has made this real surprise rally, and again, that's motivated by political tension, war, all those terrible things. And you can see the downward trend line on the daily chart was broken. There's no rising bottom, and so this is highly susceptible to profit taking. I'd be very cautious if you own gold stocks. You have to be a short-term trader with them because you never know when it's going to reverse. Looking at the 3-year weekly chart, we still have a little more upside. We've got some sort of long-term resistance, a ceiling price there. So we got a little bit more to gain before it hits that and then likely get stuck. And then let's take a look at the US dollar. UUP is the symbol for an ETF based on the US dollar. And you can see that it's gone into a little bit of a sideways range for the month of October. If we look at the short-term chart there, you see that sideways, what we call a pennant pattern. And if we get a breakout from the tip of the pennant to the upside, then we're likely to continue higher. If instead we go downside break, then we might see some pullback in the US dollar. So you want to watch that one really closely. And I'm going to show you a chart in just a moment that's probably going to drive this more than anything else. Before I do that, let's take a look at Bitcoin, GBTC. And I talked last week about how this was likely to break out soon, how it was building an optimistic pattern. And then on Monday, it did exactly that. So hopefully you guys were listening because we've started to make some good gains in Bitcoin, and some of the Bitcoin miners were fun to trade this past week. All right, now the last chart I'm going to look at is TLT, which is the US bond market. And this is where I say we may have a cause for the US dollar to start to see some profit taking, because this chart is very oversold. Using those same concepts that we talked about for the market, the distance from the trend line is growing. We're in a parabolic shaped downward trend. Volume is really increasing, which means the crowd is chasing the bond market lower. You've got this panic selling in the bond market. That's making interest rates go up. That's why the small caps have really done so poorly. And that's a situation where we're likely to see a reversal soon. Because when trends go parabolic, when you run away from the trend line, you usually get a bounce back. And that bounce back could then help the stock markets bounce. And it would also probably cause the US dollar to pull back a little bit as well. All right, so let's jump into my ratings then. US markets, all large cap, small cap, NASDAQ. I've got bearish ratings in all of them, but again, they're oversold, so they should bounce. We just need to see the signs of that. Canadian markets, short-term bearish, long-term neutral. Gold, short-term bullish, nice upward trend, but still long-term neutral. I'm a little worried about the potential for a pullback. Oil, bullish on both time frames. US dollar, short-term neutral because it is showing a little bit of toppiness, but still long-term bullish. And then Bitcoin and interest rates, bullish on both time frames. Well, at the top of the video, I promised that I would show you a chart of a stock that has done really well. And there was a whole bunch of them last week, but this was one of the leaders and one that we picked up on midweek. And this just demonstrates that some stocks can go up really well despite weakness in the market. We call these alpha stocks. They're characterized by abnormal volume, and then we look for my action candle indicator, which is my own indicator that measures abnormality using statistics, and it identified a good buy signal October 18th when we had an action candle. You have to look real close, but there's a little yellow dot there. There's one here as well, and there's one here. But this is the one that matters because this is the one that broke my Stockscores trend line indicator, another little indicator that's available to my students who do the active trader course on Stockscores. You can learn more about that at the website, stockscores.com. And there you see over the next 3 days, it made a sharp run. Now we talked when I was looking at the market charts about parabolic trends, and we were using downward trends as an example of how the market's oversold and likely to bounce. Well, you can also get overbought markets when the trend goes parabolic to the upside. So if I draw a linear trend line across these bottoms, that's our linear trend line. And when price runs up and away from that trend line, you have to watch for an exit signal. Now in this particular example, this is a 13-minute chart. This stock all of a sudden started to sell off really sharply on the 1-minute chart. And so it was pretty obvious that you needed to jump ship on that. And even if you were a little slow, and if you're watching a 1-minute chart, you wouldn't be too slow, but it would be reasonable using the 13-minute chart to use that as your exit point, because that's the low of this very tall 13-minute bar. And that's what I often do, use the lows of tall candles to lock in my support by moving my stop up. And so in that case, you're getting out at 11 times risk. So if you took $100 of risk back here, and that's not the position size, that's the amount of risk, the difference between the entry price and the stop loss price. And then you sold that here, you've made an $1,100 profit for $100 of risk. And so we call that an 11-to-1 reward for risk trade. Those are just some of the things that you can learn from Stockscores.com. Make sure you check it out. If you enjoyed the video, click the like button, subscribe to the channel, put on those notification bells. Most importantly, trade well.